Hey, what's up, traders? This is the final episode in the beginner's course where we're talking about, actually taking the trades. I told you we'll take a profitable trade before this is over, and I can show you what that looks like, okay? So let's get to that right now. I'm going to give you the disclaimer screen, and then we'll go from there. Okay, so I'm gonna have a like a little section in probably both on YouTube and in the community where we go over some basic terminology. I will do a little bit of that here, just so that people understand when I say certain words what I mean by them. Because sometimes, I have I know my limitations as a person, and sometimes I say things and people are like, well, I don't understand what that means because I'm so used to it. And so I'm trying to, pull myself back a little bit here. Okay. So when one of the good things about futures that I told you guys before is like whether the market's going up, down, or sideways, we can make money, right? So you just have to be able to pick the direction it's going. So the way I want to explain this is if you were to, if you have no position on, this is a basic terminology, you are said to be flat, okay? So if I say I'm flat, you guys know I have no position on. You have zero position on, okay? If you have a, if you buy the market, if you, a buy order, okay, means that you want the market to go, and I'm just trying to simplify this as much as possible. I wouldn't say a buy order. You want the market to go up, you make money. If the market goes buy order, market goes up, you make money. Market goes down, you lose money. Okay, in its simplest, in its simplest form. Okay, let's just say this: buy order. Sell, the market goes down, you make money, market goes up, you lose money. Okay? So let's just keep that as the simplest form, okay? If you have no position, you're what's said to be flat. If you buy the market, you are said to, let me pull this back up, you are said to be long. Okay, if you sell the market, you are said to be short, which means that, like, if you're long, you want the market to go up to make money. If you sell, you're short and you want the market to go down to make money. If the market goes up, you lose money. So if the market goes against you, so basically you're trying to pick a direction that the market is going to go, and if it goes in that direction and you predict the market movement, you make money depending on how far it goes and how far you expect it to go. You make a certain amount of money and vice versa, okay? Until you get what we call flat. So and I'm going to show you what I mean here. Right now, okay, I have one contract, because we're trading futures. This would be like the same as a share if you're coming from stocks. I have one contract. I am one contract long, meaning I bought the market right here at this price of, and I can see exactly what price. You can see I'm on the paper trader right now at 4036.75. Okay, so that's my price. I'm in from 4036.75. Now, if the market goes up here, anywhere above 4036.75, I'm making money because I have one contract on. Long means that I want the market to go in this direction. This direction, I'm making money. Okay, this direction is good. This direction is bad. That means I'm losing money. So anything below 4036.75, I'm losing money. Okay. Now, the most important part of this is this of trading and understanding how to put in orders is this. If you buy the market and you're long, okay, you must sell the market to be flat. Okay. So to get out of a long position, you need to sell, okay? Because remember, you bought the market to get long, you need to sell it to get flat. So no matter what, if you buy, you must sell to get out of the market. And it's as simple as that. If you buy the market and you're long, you must sell the market to be flat, okay? If you sell the market and you're short, you must buy the market to be flat, okay? It's very simple. And the way that I like to explain this to people is it's a simple plus and a minus, okay? It's simple plus and minus. If you bought the market, okay, right now I have a long position of one contract. Think of a long position as +1 and a short position as -1. The only way for me to get to zero, if I'm right now I'm at +1, how do I get to zero? Well, I have to +1 - 1 equals 0. That means that if I'm +1 right now, the only way for me to get to zero and to get flat, okay, is to sell a contract. So I could sell a contract down here, and I'd be losing money because that means I'm selling it at a lower price than I bought it at. Okay, think of it like a house maybe. If you buy a house for $40,36.75 and you sell it for $40,34, well, you've lost money on your house, right? You bought it for a higher price than you sold it for. Same thing here, okay? So right now, I'm in the red $150 because the market is lower than what I bought it at, okay? The market is lower than what I bought it at, all right? Now, that's just for one contract. So I could potentially add to this. I could buy another contract. So, boom. So I'm long one. Now I'm long two, right? Now I'm long two contracts because I just hit this button right here, and that allows me to buy at the market price. That's basically you telling the market, I'll buy at whatever price you're at right now. I'm taking one. So now I have two contracts. So you guys are probably following along, and this is very simple beginner stuff. If I want to get out of that position and get flat, I need to somehow sell two contracts. Again, you see that my price, my average price moved down. Now my average fill price is at $40.35 because I bought in at a lower price now. So of course my average of those two comes down a little bit. Now, if I sell those contracts back at a higher price, I've made money. If I sell those two contracts back at a lower price, I lose money. Same thing with the house. Now I own two houses, okay? So if I sell both houses at the same time for a lower price than my average, well, I've lost money, right? And if I sell both of those houses at a higher price, then I make money. Now, so to go even a step further now, you're probably asking, well, can I sell one of my houses? Well, you absolutely can sell one of your houses. All you'd have to do is push this red button up here and make sure the quantity is set at 1. Now, I can change this quantity to whatever I want it to be, okay? As long as my account parameters will allow me to trade that much. I could sell both of my houses. I could sell one of my houses. Or I could sell, let's say you say, oh, man, I don't think the market's going up anymore. I think it's going down. So if it's a simple plus and a minus system, and now I wanted to sell 3 houses, now guess what? If I push this button, now I'm going to be short one contract because I only had 2 houses and I sold 3 of them. So now I'm short a contract. Now I need the market to go down to make money, and I need the market to go up to make money. Okay? To lose money. So if it goes down now, I want the market to go down because I'm short. My position is one contract short. That means that I'm expecting the market to go down. And if it goes down, I make money. And now if it goes up and I have to buy that contract back at a higher price, I've lost money. Okay? So now I think you're starting to get the hang of the plus and the minus system. All you have to think about in trading is a plus and a minus system. If I buy one, I need to sell one to get flat. If I buy 2, I eventually need to sell 2 to get flat. I don't need to sell them at the same time, but I need to sell a quantity of 2 at some point to be out of the market and be flat. Okay, so what I was just showing you here, guys, was a market order. And the market order means, let me get this up here. Market order means I want the market now, okay? At whatever price the market price is. Okay, that's like when you go to a restaurant and it says, okay, the fish is a market price. You're paying whatever the market price is if you want that fish. You don't say, no, I want the fish at $15 if the market price is 25. The restaurant will say, okay, well, you're not having that fish, right? So the market order means I want to buy the market right now at this price. And you can see what the price is trading over here. You can see it ticking around over here, okay? The other kind of order, and the orders that I prefer, especially to get out of the market, are what we call limit orders, okay? Limit order. And limit order is you, as the trader, dictate what price you want, okay? So let me show you how to do that. So the limit order is you, as the trader, dictate what price. So right now, I am short one contract. So remember we said if you're short a contract, you need to buy a contract to get flat, right? Because of the plus and minus system. Remember, buying a contract is +1. If you're short, it's -1. Okay? So if I can right click, if you're using TradingView, you can right click under trade, okay? And I got to adjust the quantity back to 1. Make sure you do that. Okay? Now, I can buy, okay, at a lower price. So whatever price I click on, you see how if you're looking at the right side of my screen, you see it says 40, 25, 50, 40, 25. So if I wanted to buy this market back at 40, 25, and that's where I thought the market was going, I right click, I go to trade, buy 1 ES at 40, 25. What that's going to do is it's going to put your order out there that says, okay, I only want to buy the market at that price. I don't want to buy the market at any other price. I want it at that price, okay? Now, if you're going to protect yourself from losses, because remember, if this market goes up this way, you're losing money if you're short. Because if you're short, you say, I want the market to go down. I think the market is going to go down. If it goes down, you're making money. If it goes up, you're losing money. So if I'm going to protect this position, you're going to put in what is called a stop loss, okay? So again, you click wherever you want on the chart, you right click, and you set your stop loss. You see, buy a stop. Remember, since you're short the market, what's the only way to get out of that short position is to buy. If you sell, you've got to buy, and if you buy, you've got to sell. So I'm going to buy a stop at 40.45. So what this says is you're telling the market, okay, I want to take my profit, because remember, if it goes down, you're making money in this case, and if it goes up, you're losing money. I'm going to take my profit if the market gets to 40.25. And I'm gonna take my loss and cut my losses if the market gets up to 40, whatever price I set, 40, 45, 25. Okay. So now, if the market gets here, it will take me out of my position at this price. I'm telling the market, I want to buy my position back. I want to cover my position at 40, 45, and I don't want to incur any more losses once it gets to 40, 45. Take me out of the market at that point and make me flat. So now you're naming your price instead of using the market order where it's saying, I want to get out right now. I want to get out right now at whatever price it is. I want to get out. Okay. So that's the difference between the limit order and the market order. Okay. Market orders is I want the market now. I wanted the market price. The limit order is you're going to say what price you want. And I'll give you a real life example. Okay. So I'm going to hit the X, and when I hit the X, it's going to close this position out completely, okay? And it's going to cancel, okay, that position. I got to cancel these other orders that are sitting here, all right? So now, let's go back to the position of, okay, I want to get long one contract. Remember, if I buy the market, meaning I get long, I need the market to go up to make money, okay? So let's just go back to the real world example. I bought a house. Now, I'm going to put my house, I just bought a house at 500 grand, and here comes COVID and everybody's moving to Florida. I live in Florida. Everybody's moving to Florida. You know what? I'm going to put an order to sell my house at $1 million. And I'm going to set it there. I don't want to sell it right now because the market is hanging out where I bought it at. I don't want to do that. I'm going to set an order up here at $1 million. And I'm just using an analogy, real life example. And if the market price comes up to $1 million, I'd be happy to sell it at that price and take my profit. And what would my profit be? My profit would be all of, let's see, I'm trying to get let me get my position. Okay. So here would be my profit, the green box, okay? And maybe my stop loss, which the red, this is just showing you what the stop loss would be. Maybe in my example of a house, I put my stop loss at 350,000 and say, okay, if my house goes down in value because of a depression or something, I want to cut my losses and sell my house at 350K. So either I make a $500,000 profit or I take a $150,000 loss. And that's essentially what you would be doing here by putting in these orders. So I would put my stop order here and my profit target up here, okay? And if the market gets here, I make 500 grand. If the market gets here, I lose 150 grand in the example of the house. Now, of course, we're not trading houses right here. We're trading the S&P 500, but it gives you an example of the difference between limit orders and market orders, okay? Now, if I wanted to get rid of that house, I could always use a market order and if I push this, it closes the position at the market, okay? And that says, I don't want to own a house anymore. I want to rent. I'm scared of this market. Maybe I want to rent. Okay, I'm going to rent. And so I'm going to sell my house right now, pretty much what I bought it for. Boom, close my position. I'm out. I don't own a house anymore. I'm going to go rent. You got to make sure when you do that, guys, that you close your orders, cancel your orders. Otherwise, what's going to happen is, remember, these are sell orders. So if the market comes to these prices, it's automatically going to put you short one contract because the orders are still sitting there. Okay. So it's like you saying, okay, I still want to sell the market and I'm going to leave those orders there. So what happens if the market gets there? Well, I'll tell you what happens. You'll inadvertently get into a position that you don't want to be in. So make sure if you ever use market orders, you have limit orders sitting out there, you make sure that you cancel them. And there are such strategies where like you can cancel them automatically. Like for instance, if your target gets hit, it can automatically cancel your stop. So you don't come back to the computer in a big shock and a surprise. All right. That oh my God, I'm in a position I don't want to be in. Okay. So I guess in conclusion, guys, remember the easiest way to think about it is it's a plus and minus system. If you're long two contracts, you've got to sell two contracts to be flat. You're always looking to get back to zero to be out of the market. Now, if you're short contracts, that means you're minus contracts, meaning that you're looking for the market to go down. The only way to get back to zero is to buy contracts back. Okay, we call that covering your short. Okay, that's I'm going to go into terminology in another video. Covering your short. Okay, it's essentially what you're doing is you're buying back your short position. Okay, so that's how to execute trades, guys. I told you guys that I'd put on a position that had made money. I think that maybe one of those positions made $25 or something like that. I don't want to make this video any longer than it already is. I hope you guys got the point. This is the end of the beginner's course. We will go much, much deeper into trade strategy and execution strategy and all of that. But I wanted to, at least at the end of this beginner's course, give you the ability to understand what futures is, understand how to get your market data set up in your platform, and understand how to take a trade. Okay, how to take a trade. And I think that we've done that. And if you guys have any questions that I didn't cover or you're confused, I'm happy to do some stuff in the Q&A for you all around, executions and stuff. I'm sorry I'm looking at the screen because I'm watching the market tick around. But I hope that was helpful. Please, if you have any questions, let us know in the comments, and we'll talk to you guys all soon.